Now, let's have a look at the economy now. And we are seeing what is quite an historic conflict between the RBA and the Albanese government play out on a daily basis. The RBA seeks to take money out of the economy through rate rises, while the government insists on injecting money back into the economy through big spending. Albanese's latest pay rise of 15% for childcare workers came just 2 days after the RBA specifically said the government in spending was keeping inflation high and that more rate rises may be necessary. Well, we might have to pay even higher interest rates just so the Prime Minister can have an announceable, so to speak, and positive PR. The massive 15% pay rises for childcare workers could now be replicated in other sectors, with more unions pushing hard for similar-sized pay rises, as the Australian reported today. We're in an inflation crisis and the Albanese government is working against the RBA. It's a potent political line of attack for the opposition. Today, yet again, Peter Dutton hounded the Prime Minister over his broken promise on the cost of living.
Before the election, the now Prime Minister promised to cut electricity bills by $275, provide cheaper mortgages and to ensure families will be better off on the cost of living. Instead of reducing costs for working families, he's delivered 12 mortgage rate increases, a 22% increase in electricity prices, and food and groceries have jumped by over 11%. Why does this tricky Prime Minister repeatedly promise one thing and do another?
After 3 failed budgets, Labor has added over $315 billion of spending. That's over $30,000 per household. This Prime Minister promised to reduce the cost of living, but the RBA says his decisions are pushing up the cost of living. Why does this tricky Prime Minister repeatedly promise one thing and then do another?
Well, given the RBA statements are in black and white, the government spending, and it's both state and federal government spending, is keeping inflation high, there's really not much room for Albanese to move. So he paints Peter Dutton as heartless for refusing to commit to the 15% pay rise, when really it's the PM who's heartless because his spending is keeping inflation higher for longer and risking even more rate rises. Albanese's predecessor as Labor leader, Bill Shorten, may have made things worse for the government on Q&A last night. Shorten eloquently highlighted all the areas where Labor was contributing to inflation. He also helpfully added that some of it is homegrown. Have a look.
It is not all the government's fault about inflation. The things they're criticising, yes, we have increased the age pension by $120 a fortnight in the last 2 years. Yes, we have increased the disability support pension by about $120 over the last 2 years. Yes, we are going to pay early childhood educators a pay rise. Yes, we have supported wage rises for millions of people. Yes, we have supported 2.8 million people under $45,000 a year getting access to the tax cut, which was otherwise reserved for the top end. There is some homegrown inflation, but I just think this argument that somehow the government should it's spending too much. What I never hear from perhaps either the commentators or the Lib Pollies is, what are you going to cut?
Look, he's a very clever politician, Shorten, so that response is actually quite funny. And Shorten saying it's not all the government's fault in inflation, and yes, some of it is homegrown. I mean, he's basically mounting the coalition's argument for them. And by the way, Jane Hume did have a list of ideas about, well, what the government could cut. Have a look.
What about $2 billion on the suburban rail loop in Victoria, a project that doesn't even have a business case that's stacked up? What about $1 billion to create solar panels that are never going to be competitive? $500 million on an American company's quantum computing project. And if you want to get right down to brass tacks, Bill, how about $620,000 on your speechwriter so that you can sound more empathetic to FDI's recipients?
No.
Well, $620,000 isn't nothing. But voter anger at the Prime Minister for working against the central bank is now growing. Figures show that 35% of Australians have a mortgage. That's 3.3 million households going through financial pain just so Albanese can have some positive PR to try and win votes ahead of the election. The RBA's blunt instrument of raising rates does unfairly shoulder the burden of fighting inflation on mortgage holders. those 3.3 million households. They're usually middle-income families working 9-to-5 jobs, trying to raise kids. There are fairer ways of bringing down inflation that could work even faster. Now, there are two cutting-edge ideas being discussed at the moment by the country's leading economists. One is to have a variable rate of GST, where the RBA or another independent authority could adjust the rate higher or lower. This would reduce demand. It would affect all Australians equally. But there's another option that economists say would be an elegant solution to cooling the economy, and fast. It's adjusting the rate of the superannuation guarantee. In times like we're in now, the RBA or again another independent body could lift the super guarantee to, say, 15%. It reduces disposable income and thus spending. It's fairer than only having mortgage holders fight inflation. And then in other times when the economy is weaker and you need stimulation, the super guarantee could be cut to, say, 5%, and everyone takes home more money and is able to spend it, stimulating the economy. Unlike with rate rises where you never see the extra money you're paying again, when you pay more super, you do actually get to keep the money for your retirement. The Sydney Morning Herald's economics editor Ross Gittins wrote about these ideas briefly. He said, "I'm attracted to the idea of temporary changes to the rate of compulsory superannuation contributions." He said the reliance on interest rates to reduce demand is hugely unfair, but it's also lacking in effectiveness. All of us have contributed to the excessive demand for goods and services, but only the minority of us with big mortgages have been pressed directly to pull back our spending. And he argues there's a strong case for reform in the macro economy. And why should average Australians shoulder the burden of fighting the cost of living crisis while Albanese doesn't take the hint from the RBA to cut spending?